Bum, bum, bum. Du-du-du-du. Du-du-du. Du-du-du-du. Du-du-du-du. Du-du. Du-du-du. Du-du-du-du. All right, let's get this party moving. Bum, 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 bum. All right, all right, all right. What's up? What's up? What's up? How you doing? All right, all right. Let's get this thing going. Bum, 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 bum. Da, 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 da. All right, good morning, everybody. Let me make sure everybody gets in okay. Bryce Daddy, what up? Let me see what you guys got here. Let me see what you guys got here. All right, all right. We in the game? Good. The big game? Even better. Oh, man, look at this thing. What a beauty. What a beauty. Michael, what's up, baby? How you guys doing? Cool. Michael, I'll look at all your tickers and stuff. Let me go over a couple things here, and then I'll dig into all of yours after, in case you want to change something. All right, cool, cool, cool. Michael, hey, good job this last 2 weeks being just kind of consistent with everything. It's nice, right? It's nice to do a little bit of winning every day. Woo! All right. Look, we got a week open on the market. This is ideal. If we had gapped up today, we would have probably faded off a little bit. The week open actually gives us a little bit of room. One thing to be mindful of as you get into this kind of, we're in this phase of a bull market. When the market has flat days, they often are the best times to trade. In a hot market where you are trending up the bone zone, you do not need a run in the QQQ to actually have like a lot of stocks break out. You don't need the QQQ to have a lot of stocks break out. Like you don't need anything, right? Like you notice the IWM is not doing anything, right? But you have a lot of mid cap stocks, small cap stocks just firing up one after another. So a little bit of a rest day today in the indexes is probably even a good thing, but individual stocks will still run off. And so there's a lot to play, regardless of kind of what we're thinking with the general market. So let's get to work here. The SPY is a little bit more extended than the QQQ. And this is the thing we'll have to pay attention to today a little bit. Because, the breakout was up here, so we kind of moved about 10 points up. We're not like, we're overbought, but we're not necessarily like parabolic or anything, right? Like we just been going up in a steady manner, but we are kind of testing some overbought conditions here. We got a 93 stochastics, right? You're kind of above the top of the Bollinger Band for a second. So like if you thrust through big today, like you may get kind of an end of day fade or something like that. What happens when the market gets so extended off its base? Every day that you get off its base without taking a rest, what ends up happening is, you open yourself up for the chance of kind of like those, you ever like see like those like midday, just like 2 candle, like algo dumps that just like knock everything down like 3-4%. And you're like 2-3%. And you're like, whoa, right? And then everybody goes short and then it rips back. You'll get a lot more of those when the market starts to get a little bit extended off its base. So just kind of keep that into mind as you're going through, your day. And if you look at the IWM here, right, we still haven't broken out yet. And it's hard to even tell where the exact breakout is. It doesn't exactly matter. It's more about a zone of love than anything. So, we're getting into the suction territory here. If it finally happens, then, we have some upside to go on this. And the US market has just been gangbusters. There's been, some months we've had weird jobs numbers, some months we've had weird inflation numbers, some months we've had this. But in the end, has any of the news mattered at all the last couple of years? They've mattered for like a couple weeks, but they haven't really mattered on a longer term basis. We've just been grinding up for like a huge long period of time. So right now, it's still in all systems is go. We're in a bull market. There's nothing refuting it. And every study, everything that you ever see that talks about them will tell you that they tend to continue for, periods of time when you have these levels of breakout. So we've got a lot of kind of things going for us. And frankly, we should enjoy it because you only get a handful of months a year where you get like this easy market where you're just like grinding up and nothing crazy and everything just works. That's it's a rare bird, right? You get a handful of months a year where it's happening, and we're in it right now, right? We're in it right now. So let's just kind of be mindful of those things. Bryce, let me see what you're looking at here. So look, a couple of you guys got Peloton on your watch list here. When you have a base like this, you get a lot of room of upside. But what we have to do is just be a little bit mindful. You probably don't want to chase a huge amount of strength today because of, it already gapped up like 4% and the ATR is 5%, right? Now the ATR will expand because it's moving out of range. So that's okay. But you want to make sure like you don't chase anything up too far, oftentimes because you're on kind of day 6 of the move. And so you have a few extra green days. Like this Apple is a little bit easier, right? Like, you're coming right out of the base today. It's day 1. So it's a little bit different, right? The difference between day 1 and day 5, right? And so that's a little bit different. And then, the thing with Apple too is that even though it's a slow, nasty little grandpa stock, you could trade the calls on it and still rip more money than you can trading some small cap stock anyways, right? The calls on it are pretty liquid, so like if you're trading to 234s today, you could just go with the 235s, right? And you got yourself a little bit of hot and heavy. And then for you, Bryce, right? It's like, remember, you have we talked about yesterday, you have a set amount of risk that you want to do per trade and kind of size things accordingly. This coin you'll have to be careful on now because any kind of weakness, say it dumps off down here, then you've got room to sell into it. So I have coin on my watch list too. And if it dumps down a little bit here, then we can kind of play the scoop back. But if it shoves off huge right at the open and taps into the 200-day moving average, then you have to let it go. And the reason is like if you go 3 hot days right into the 200-day moving average, you may not break out above that, right? Because you're not coiled up enough. And so like I really like this name too. But remember, you want to trade around that 200 to 201, because that's going to be a major resistance point, right? And then, with the kind of, if you look left here, right, it's not just the 200-day moving average. You have a lot of supply into this zone here, right? So if we're looking at coin and we're looking at, right, just like a zone of supply, that's the difference, right, between breakouts and like trying to do bounces, guys. So there's a small dichotomy between breakouts and bounces, right? Is that when you do a bounce and you look left, right, you have all this congestion. So every one of these candles holds a certain level of supply, right? And we don't really know how much, right? But we know the more there is, the more supply there is. And so what happens is when you have something like that, it moves a little bit different than, if you have something that's just like, right, breaking out and then you're clearing levels, right? So like, if you're looking, right, if you're in UPST and you're looking left, you don't have any levels of supply. You've cleared all of it, right? And so what happens is when you clear all of it, going back years, now you move a lot cleaner. And so you have just a small, kind of small nuance in trading that becomes really, really important, right? Are you coming into a congestion spot, right? And then you need to really work through it, right? So this is a congestion spot now. So it can go, and because coin has a lot of momentum, it's just a fast stock, but it's got to kind of like, you got to eat through it, right? It's like you're like termites, right? You got to kind of eat through it, eat through all that supply. And it's like, so there's like fits and starts oftentimes when you have that. And so you just always, it's like a small little nuance. That's why Tesla trades like such shit for the most part, right? Because when you look at Tesla and right, you're always kind of right, you're looking back in time, you see just endless bag holders of supply, right? It's just range. And so Tesla has this nasty habit of, right, going up and then it just collapses back, as soon as it gets overbought, right? And it's been doing that for a long period of time. And that's why it's so crazy that people love trading it. It's like, I could see if you just were obsessed with trading it, if it was doing this, right? And it's like this greatest stock in the world. But like, imagine how retarded you have to be if you didn't know this was Tesla and this was just like FUCK stock. Would you ever put it on your watch list? No, you wouldn't. Would you ever take a trade in it? No, you wouldn't. And so then you have to ask yourself, if you take a lot of trades in this, are you the world's biggest asshole? You may be, right? Because if you didn't know this was anything, you would just be like, wow, it's like some silver stock, right? It's like some oil stock. Like this, does this look any different than Oxy? Right? Does it look any different than fucking Oxy? Nope. And so always look left and look for those levels of supply. And that's why, you're going to start to see, like, if a firm keeps its going, right, and it kind of clears out of this 51, 52, then like you have all this, right? You have all this room to go. And so this is big. This is so important, right? Like, once you start to clear, now you don't have any of those bag holders back there to go through. Good. Now, going through this, I saw some of you guys had ARM on the watch list too. I do think ARM is probably up too many days in a row. So you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days in a row. So you do want to be careful on that one. I would not personally put it on my watch list at 10 days. I mean, you're the last man to the gangbang, right? You just got out of prison. You've been hanging out with some hard-hitting son of a bitches. And now you're like, man, I'm going back the other way, baby. And so you get to partake, but you don't, then you can't. But otherwise, no. Right? Like if you're married, you can't be the last man to the gangbang because then you bring home venereal disease. That'd be just crazy. So you don't want to do none of that. So IWM's looking good. All right, good. Now let's take a look at the gappers here, and then let's start to just, fucking wolf. No. Why? That was top of my list today. You had the pop and then the inside day. Oh, that ain't right. That is not right. Should have swung these. Hey, in a hot market, secondary thought, the real money, like when you get some of these base stocks, dude, they'll start putting in the PRs right when they're going to break out. Like it's just like clockwork, right? So just keep an eye on that too. Like you've got a lot that goes into these, but like, look at that bad boy, right? So I think we can add it, but it's probably done, right? Like, damn, we can add it, but it's probably used up a lot of it. Now, look, if you're trading pre-market, then, maybe you got a couple shreds out of it. But for me, that's a little bit uncouth, right? Trading pre-market, it's a little bit uncouth. The morning is for family time. It's for the beach. It's for taking your shower. You got to wash your balls, right? You got to do things in the morning to make yourself a civilized human being. And so if you're sitting there trading Wolf at like 6 a.m., I mean, I respect it. I respect it. But there's other things we want to do. I mean, you guys see these face serums I'm putting on? I got 6 different face serums that I have to put on, and it takes 8 minutes of absorption per cream. And so, I don't have time to wake up in the pre-market and just trade the Wolf Nation, even though maybe I should have, right? Maybe I should have. So it's looking good. We can add it, but it need probably a deep pull. Now, look, it's on the bigger time, it's got a lot of room to go, right? It's still just $1 billion company. It's still $1 billion company, so you just got to be a little bit careful. Hey, Sports Edge, Tuesdays, Thursdays. Oh, man, DJ, that ain't right. So let's add this. So look, they've got basically $2.5 billion additional capital. The reason it's been going down is they've been saying, right, they're going to be running out of funds. They were trading like it was going bankrupt. Now they've come out and said, we're not bankrupt, right? We've got some monies coming in. And so now we got something there, right? So what we want to be doing is, all right, if this pulls at the open, and you could do an ORB on it, but it's not really like, I think it'd be easier if we do a little bit of a pull. It may ORB at the open, but if it does a little pull, I think it'd be easier. A pull back to the 9 EMA, 20 EMA, something along that end would be ideal. Let it pop up and then pull back. So what's a 9 EMA, 20 EMA pullback? So when you get a pop at the open, the ideal setup, guys, that you want to do when you get a pop, if you're a day trader, not if you're a swing trader, right? So swing trading is different than day trading. But if you're a day trader, when you pop up at the open and you grind back into your 9 EMA and you get a green candle to hold, that's your ideal entry. It prevents some chasing. It gets you in low on some support, and then you can rip this thing back, right? And then you got all this room to go. So for the Wolf Nation, right? For the Wolf Nation, let's get a little bit of a pull. It may take a second to get to the 9 EMA, but it'll get there at some point. Guys, after you look at the indexes, you always want to look through for any of the PR plays, right? You always want to be hunting for PR plays, especially this time of the year, because we're in earnings season. So earnings season comes 4 times a year. This is where, all the stocks are going to be announcing news nonstop. So this is the right time. You want to do a pre-market scan, 3% or more gap, minimum 50,000 shares in volume. That's the filter. And then we flip through it individually. We could tighten it if we need to, but I like to flip through them individually. So see this MGTX has got some Parkinson's news here, but it's only got 80,000 shares in volume. So it's just too thin, I'll leave that one for the degenerate, 18-year-olds that run the Discords. They rent the Lambos, right? We leave that stuff alone for now. We're good God-fearing Christian people over here. And we're Detroit Lions fans, even though our Super Bowl dreams were trounced by the injury to Aiden Hutchinson. God bless his soul. But we still have hope. Not much, but we still have hope. Look at this, Ericsson. This is Ericsson Telephone. Damn, I used to have an Ericsson back in the day. Shares rise pre-bill after Q3 earnings. Sales beat estimates. Hey, this is not a big ATR stock, so it's got an earnings beat. That's usually something you like. But if you look at the size of these candles here, this thing moves 10 cents a day, right? Well, it moves exactly 18 cents a day. So not really... It's not going to be target rich for us. Schwab's got earnings out. Earnings flat, revenues climb. This could work. It's a bank stock, so it's not going to move. It's not going to move like sexy. You'd probably have to trade the options on it, but it could do it. It's worth a gander to add to the list. It won't be it won't move like Wolf. Why? It's got a 2 billion share float. You got 2 billion share float, like you grind a little bit, right? You're a little bit of a grindy McGee. I hate bank stocks, and this is a broker, but still, I hate bank stocks. So we're going to add it, but the caveat is it's not a priority. Like, I'd rather trade Wolf. Wolf will move more clean. Look, Wolf's even got more volume on it, right? You get a short squeeze in the works. DJT. Dude. $11 to $34. The Trumpster's fortunes have turned. No longer does it look like he's going to be entering prison, but he's going to be the president of the United States again. That's what this is telling us, right? This is up 300% now. Look, it's an awesome stock to trade. We've had a lot of fun with it, but it's at the 200-day moving average, and the 9 EMA is $10 away. I think this is probably, it's probably a short today for the day. I wouldn't blindly do it because it's got a lot of momentum and a lot of volume. But this to me is a rubber band short. So what's a rubber band short? A rubber band short is a parabolic setup, right? It's a parabolic setup. It's a setup that is based on an overbought condition that's very extended, right? So you got this candle. Let me go to a little clearer chart. You got the candle completely outside the upper Bollinger Band. Your upper Bollinger Band signifies a stretch on a stock when it's beyond its normal standard deviation. I know it's a weird Indian mouthful, right? But it just means it's like you snap the damn rubber band too high. Now you're running into the 200-day moving average. Your stochastics are at 88. So anything above 80 is overbought. Anything above 90 is, right, you're getting into the extreme. And it's been overbought for some time. So stocks can stay overbought for a while. It's just one thing. And then you're jamming into that 200-day moving average. But the big thing is, too, you gap today, right? So if you're gapping up 9-10% into resistance, oftentimes that can be an exhaustion gap. So this I'm down with. I think for a day trade, we could put this on the watch list for a potential short. I won't chase it down like if it just like flushes off. I need it to kind of stall into some resistance spots or at least do an ORB or something like that. Don't blindly do it. So usually like when we're trading, these are, I use 5-minute candles. So, when you're trading, there's 3 different stages to the trading day. You got your morning, your open. You got your morning, your open, and midday. So if you take an opening range setup, for example, there's 3 patterns that you can do at the open that I think are worth a damn. A red to green, ORB, and quick pullback buy. So in general, if you do an opening range pattern, you're holding for the open because after the open, stocks tend to base out and consolidate midday. So the open is hot, midday is not, right? So like oftentimes you get a thrust in the open and then you just sit around for hours and you kind of congeal whatever action you had at the open. And then end of the day, you choose a side. So, when I trade something like this, like it would be literally, I'd be taking the first thrust down to $2-3. And then when you start to congeal and show secondary patterns, then, you re-hit into these things. Good. So let's add this for now. And look, counter trend shorting is not an easy trade. Out of all the setups you do, trend trading is the easiest. Trading with the trends is the easiest setup you can do. It's clean, it's low risk, and you have all the reward, right? Stocks can go up hundreds of percent. When you are going counter trend trading, you get these quick dumps. You may get 5-10 points sometimes. Like, when we were shorting it before, dude, it took, they'll bleed, but it took a long time, right? So nobody's going to hold that long. What we're looking for is the speed up and then the dumps, right? So it's a little bit of a tougher type of trade, but hey, that's why they pay us the big bucks. Now let's go back into this. Look at Rumble. Oh, Rumble is coming out of range too. Rumble stocks to trade. If you look left, right, there's just a lot of supply there. So not my ideal type of flavor. Peloton is coming out of range too, guys. For any of you guys that like kind of these small cappy type of names, Peloton, I mean, it's got a huge level here. Now, I wouldn't chase this thing up today, but if it kind of comes back here and back and fills this range out here, I mean, that's probably a decent spot, right? Like that's probably a decent spot. This is a longer term breakout that's in the works. Like, you're clearing out a bunch of levels here. At least it goes back a year. And, on a bigger term basis, right, you have kind of a lot of room. Now, look, this company's obviously a huge turd. It was a $100 billion company or, $50 billion company. And now it's a one, right? But hey, every dog has its day. That's America. Boots and Coots, adjusted net earnings fall, sales rise. Hey, this actually also has a decent enough base. It used to be $70, but it's Walgreens. Like these kind of drugstores suck to trade. They just move too thick. Marvel. Let me see what's up with this bad boy. I didn't see any news on this thing. That's like a hot little breakout. That is a pretty hot little breakout here. You're starting to clear out some big levels here. You're in the right sector, guys. Semiconductors have been hot. If you look at the SMH, right, you've kind of cleared out some ranges here. And if you look at NVIDIA, right, your NVIDIA is starting to test its all-time highs. And so if that breaks out, you're going to be getting some nice semiconductor breakouts. They'll all go together. Even the shittiest ones, right? Even the shittiest ones will go together. So when you see this, like this is the right type of play, right? This is the right type of play. I don't have much success personally with this stock, but the look is the look. Oh, that's not bad. Let's add it. Look, and you got banks all pushing too, right? Bank of America's got earnings out. So this is probably good for the financials. This is good for a lot of different things here. Personally, I'd rather see the banks get fucking dusted, but they deserve it. Them damn pigs. Bum, bum, bum. You can trade it if you want. Banks are a little bit of a grinder, but they're all going, right? So this is good for the market. It'll pick up the overall market, especially on the SPY, not as much on the QQQs. And dude, look at all this. Like you got flat top breakout on Goldman Sachs. I mean, this is like kind of what you want to see, right? You got a lot of good stuff here. Now look, this MSTR is up 3% this morning. This is still a big breakout. I sold most of my swing shares. What were we had it at 169, 170. And then we were day trading the shit out of this. We sold them on Friday. I probably should have kept them one more day. But if we start to congeal back here, like this is a big time breakout, this is the hottest stock around, Now, yesterday's pullback was a little bit furious, but I think it's still in play here. Like, it may need a few days to just marinate. But I'd keep that on your long-term watch list. It may not be anything for today, but I would definitely keep that on your long-term watch list because the level of breakout is huge. Now, look. UNH. Disgusting. Healthcare companies, too. The only thing worse than banks? Insurance companies. Healthcare companies. They all deserve to get smoked out. But these guys, don't even get me started on United Health. Good Lord. Pigs. Screw them. We're not. If I'm gonna add it to the watch list. If it sets up, we may short it just to show what American justice looks like. But I don't think that's the hottest play for you guys. All right, let's get into the regular watch list. So I made a list of stocks here that I think are ready to. Right. So as long as the Qs holds up, which it is, right? And remember, it's overbought, but it's not necessarily extended. So you do have some room. The SPY is a little bit more extended, right? And with the banks gapping up and stuff like that, like you may, you know, you may get one more big push on this before you get a pullback. And when I say pullback, I don't mean like, oh, the market's going to come crashing down. I'm talking like, some retests of support, shake people out, that kind of thing. So let's get into this and see what's going on. So, hey, first of all, Oklo had a PR out. Oklo had a PR out end of day yesterday, and you got a pretty nice push right into the close. Let's see here. The DOE. So it's at first of all, it's had a couple nice pieces of PRs out here. So if you go, dun, 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 dun. Oh, I'm on the wrong one. If you read up here, right, Oklo DOE approves conceptual safety design report for Oklo's Aurora fuel fabrication facility. I don't know exactly what that means, but that's a buenos. This is a nuclear stock, right? Nuclear stocks are hot. There's no getting around it. And the reason we know they're hot is that there's a huge amount of power needed for all this AI stuff, right? Microsoft, Google, they're all in a rush building all these data centers. And, Oklo's been having news after news, right? So, dude, Google's been, they've been chatting with the Google, right? I mean, there's all these uranium plays have been going because Google's saying they're going to be using nuclear energy to power some of their data, right? And Microsoft did the same, Microsoft did the same thing just recently. And so these are all the nuclear companies, and most of them are just utilities. But you've got yourself VST, CG, Oklo, NNE. You've got a whole host of these that on a longer term basis are starting some big trends. So what we want to be doing is, we want to keep these on the watch list. So if you look here, you've got a little bit of a flag pattern developing here. Not the sexiest one, but with the catalyst 2 on this, I think we can have this. Dude, I think we got to put this on our watch list. Not my particular flavor and price, but it's doing a lot of volume. It did 11 million shares. It's not like some penny stock. We can trade this thing with a little bit of certainty. Apple. So Apple's got this breakout over here. 1 test, 2 tests, 3 tests, right? Dude, it's a flat top breakout. So flat top breakout is when you have something that's trending, you go sideways for 3 to 4 months, right? Minimum 2 months you need. You start to peak the top of its range. You want your EMAs curling up under it. And usually if you can break, you have a subsequent measured move of around the same amount of time as the base. So, you got a multi-month base here. So if we break, we theoretically could have a multi-month move. Now, look, Apple moves very slow. Its ATR is 1.6% per day. So, you ain't getting rich trading something for 1% a day. That's for sure, right? Even if you're trading a multi-million-dollar account. So what you want to be doing, for me personally, I trade the options on Apple, right? So I just go in the money, or near a strike price, 235s, and then you can day trade as you see the patterns on Apple. You day trade essentially those calls, and they'll move pretty well. You'll have a range of 100%, 200% on the calls, and you don't go crazy. You don't buy $50,000 worth of calls, right? These things are, say they're $1, right? Today, you go 10 contracts, 10, 20 contracts. They're going to move around 30 contracts, whatever it might be. And, you still want to risk the same as you would if you were trading shares. Like, hey, I'm risking $500 per trade or $400 per trade, but you just size them for the contract. So you can put less money in, but you'll have the similar risk. So then, and you'll get a little bit more of that juice. Now, this I'm into. So Cell H, this is the Monster energy drink for the classy people, right? If you're in the wine and cheese party crowd, you probably know a little bit about that Celsius. I'm just kidding. I don't know about that, but it feels like it's just the less less redneck Monster Energy drink, right? Because they put like grapefruits, pictures of grapefruits and shit on their bottles. Like that right there tells me, like, you're not driving monster trucks, right? You're driving Teslas. So you got one test, two tests, three tests. Is it a pretty low float, 200 million shares? This is $99 just recently. So you've retraced 70% of the move. Now you're really building up. You're really building up into this. One test, two tests, three tests. Man, you're right into this thing. So we got a level here. So let's go to kind of like a 30-minute chart here, just so you can see it a little bit cleaner. Actually, we'll go to an hourly. This thing is ready to party, I think, today. You got one test, two tests, three tests, four tests. Charlie, chill. 35.50. All right. 35.50 is where it starts to do the Lord's work. All right. 35.50 is where it starts to do the Lord's work. It looks pretty good. So you don't just buy it blindly because it broke over 35.50, right? You got to have a pattern, right? ORB, quick pullback buy, flag something along that end. You may just take this thing out right off at the open. You want to start looking as it starts to approach that, or as it's approaching, or even once it's past, you can keep day trading it. And frankly, if it closes over here, it might even be a swing trade, depending on how it opens. Okta, I got this on watch. This is not for a day trade. I've got this on watch for a potential swing trade. This is a bottoming pattern here, and it's a little bit of a tricky bastard to day trade. It's a little bit thin, but it's a bottoming pattern here. When it looks like a little W, that's a bottoming pattern in a nutshell, right? So when it looks like a little W, it's a bottoming pattern. So you've got a level here, about 78.85. You got your 9 EMA curling up under it. So, and you've got a lot of room here. Like, you don't really have any levels of resistance till you get more up into here. And then you got this gap fill to the 200-day moving average. So I like this one. I've been watching it as it tightens up. It may need another day or two, but if it can come out of this flag here, I think that would probably signify the bottom on this stock. And it's something I probably tuck into like an IRA kind of, right, a longer term account. Love the overall look of it. This AMAT is actually something I'm also looking to add into a longer term account. We could day trade this today too. It looks also like a swing trade, but like you're clearing out a big level here. So, right, you came down 30-40%, right? Made a W pattern, and now you got a nice level that you're just building out here, right? You're testing. So you need minimum 3 tests of resistance. 3 tests of resistance to be confirmed for breakout, right? So 2 tests are for losers. 3 tests are for winners. And so you got test. I think Andre, you had this on your list first. Good job. 214, you're right into it, right? Like this has got a good overall look to it. It's got some upside too, because if you look, right, the old high is at 255. So if you look at the rest of semiconductors, right, you got TSM, right, AVGO, they're all ripping to highs here, right? And so you got yourself a little bit of upside. I got Uber on the watch list. Uber, pop, inside day yesterday. Guys, so when you get a big pop and then you get the inside day, I mean, that's like your classic, dude, that is your classic rest day. Look how narrow the range was. So when you get a significant piece of news and you get a day where like you barely move, that's super bullish. Like that's usually a telltale sign that it's ready to party again. Add this to your watch list. I think this is also top of the list. My fave for today out of the tech is Qualcomm. It's a slow mover. You probably have to do the calls on this one too, but you got test. Dude, it's got an awesome look to it, right? It's similar to AMAT, but a little bit more liquid. It did 15 million shares in volume yesterday. That's what we want to see. You're right at the sweet spot. So for something like this, if it takes out this previous day's high, that's the trigger for me, right? And then we can do all the patterns that we always do. ORBs, quick pullback buys, all that fun stuff. This is got a good look to it. Keep an eye on it. Lululemon. This actually looks like a swing trade to me. Not a good day trader because it's got tons of range. Not a necessarily good day trade. It doesn't do enough liquidity for me. I tend to do better. Like it has the bare minimum of liquidity, 2 million shares in volume. Statistically, I just trade a lot better when I have a stock that's doing like 5, 10 million shares in volume. That's always been the case for me. So to me, that kind of looks a little bit more like a swing, but dude, it ain't bad. That's for sure. Okta, we talked about. Look at this Coupang. I'm going to take this off the list because these Chinas are dudding out right now. It looks fantastic, but the rest of the Chinese market it looks done for now. You know, they did. So look, they did some more stimuli, and they announced some more stimuli yesterday, and the market did not receive it well. I, like a loser, bought a bunch of it. And then and they dumped in like minutes and we got stopped out. Like we bought some and then I was like, man, these look good. I was up like $1 on future or something. And then they dumped so damn fast. And you know, you just get stopped out. I lost 80 cents or whatever on Baba. But last one, coin. Dude, you got a week open on this? Let's watch this for red to green. Now, if it goes red to green, you got to sell it into the 200-day moving average because that resistance is probably going to resist. Dude, look at the Wolf Nation go, right? We got a lot of good stuff here. Guys, there's probably not as many hot setups today as there were yesterday and Friday because the market's getting a little bit extended. You got all these names that we like to trade, and they're just a little bit long in the tooth. And so a little bit of a rest day is just going to go, I mean, frankly, a long way. Like, see all these things, like our whole watch list of stocks that we've been trading, and they're all up shit tons, right? MSTR. So we need a little bit of a rest. What I would suggest for today is to make sure that you're trading the names that are close to the bases, right? The names that are close to the bases. So you want to do like Qualcomm, right? You sell some of these names. And then, of course, you can always do a PR play. Anything that's got PRs out like Wolf and stuff, those will move kind of independent to the market. So let's go do what we do. I'll be in the Discord room and doing the Lord's work.